Assalamualaikum warahmatullahi wabarakatuh. Good day, everyone. I am Abdillah A. Aziz from AAA Solutions, and today I'll be sharing our financial planning and analysis for our product, Roulette. Now, let us start with our selling price and the cost of goods sold. First, each roulette sells for 349 pesos. For the cost of goods sold, the raw materials cost 220 pesos. The direct labor is 2.50 pesos per unit, and the packaging is 10 pesos per unit for a total of 232.50 pesos per unit. Now let us break down our unit economics, which shows whether one sale covers its costs and contributes to profit. Now, first, like what I've said earlier, our cost of goods sold totals 232.5 pesos or 66.6% of the selling price. The second one are the salaries are 68 pesos per unit or 19.5%. And then the net income sits at 17 pesos per unit or 4.9% rather. And then the interest, taxes, and depreciation are 14 pesos or 4%. And then customer acquisition cost or CAC is at 10 pesos per unit or just 2.9%. And then finally, for the overheads, it totals at 8 pesos or just 2.3%. But so in short, each roulette not only covers its production and operational costs, but also it contributes to profit, helping our venture grow and sustain our business. And now let us take a look at our monthly revenues and find out when we reach break even. Now, for our first month, we got 69,800 in revenue for 200 units sold. For the second month, we got 72,592 pesos for 208 units sold. For our third month, we have 75,496 pesos for 216 units sold. And then for our fourth month, we have 78,516 for 225 units sold in assumption. And then for our fifth month, we have 81,656 pesos for 234 units sold at 349 each. And then for the sixth month, we have 84,922 pesos for 243 units sold. And then for the seventh month, we have 88,319 pesos for 253 units sold. So as you can see, our revenue continues upward. And then for the eighth month, we have 91,852 pesos for 263 units sold. And for the ninth month, we have 95,526 pesos for 274 units sold. And then for the 10th, we have 99,347 pesos for 285 units sold, nearing the 100K milestone. And then for the 11th month, we have 103,321 pesos for 296 units sold. And then lastly, for our 12th month, we have 107,454 pesos for our 308 units sold. And then for the whole year, we have a total revenue of 1,048,801 pesos for a total of 3,005 units sold. Now, if we look at our net income, we can see there that we lost 633 pesos on the first month, and on the second month, we gained 239 pesos. That only means that we got our break even on the second month of operation. And then as you can see here, our net income increases every month with an accumulation at the end of the year at 66,809 pesos. Now, for our cash burn rate and the money needed before we become profitable, considering the monthly fixed cost of 21,500 pesos and the variable cost of 46,500, we will get a total burn rate of 68,000 pesos per month. And then considering all costs from month 1 to month 2, uh, putting in mind that we got our break even on the second month, we can get a total of 142,788 as the total amount spent before becoming profitable. If we add the 70,433 pesos that for for the total cost for the first month, and then the 72,353 pesos on the second month. And now let us move on to our monthly sales growth rate and operating profit. First, for our monthly sales growth rate assumption is at 4%, making sure it is realistic and achievable. And by that, it also helps our operating profit to increase each month by uh, a good rate. So as you can see in this table, from 1,800 pesos in the first month, it increased to 2,732 pesos in the second month, and then 3,701 pesos in the third month, and then on the fourth month it is 4,901 pesos. For the fifth month it is 5,758 pesos, and then 6,848 pesos in the sixth month, and then 7,982 pesos in the seventh month, and then 9,161 pesos in the eighth month, and then for the ninth month we have 10,388 pesos, and then on the 10th month we have 11,663 pesos, and then on the 11th month we have 12,290 pesos in operating profit, and then lastly for the 12th month we have 14,369 pesos in the uh, 12. So for a total of 92,101 pesos for the whole year. And then based on the data, I have learned that as long as the monthly sales increases, the operating profit also increases, as well as the revenues and the net income. As an investor, yes, I would consider providing angel equity funding. The venture addresses a clear pain point for engineering and architecture students, and also it has a functional prototype and it shows early profitability. So, with strong marketing, campus adoption, and careful cost management, the team demonstrates promise for long term growth.